The market is massive. I mean, we have a fraction of it. If just the IRAs alone put 5% of their portfolios into Bitcoin only, right? It's the 15-year-old most stable asset, never been hacked, no issuer, $2 trillion market cap. Well, maybe it's down a little bit today, and long track record, right? So even if they just did that, it's 700 billion in assets that will flow into the digital arena over the next, 5 to 10 year time frame. And we're the biggest. We have 15. So the growth is massive.
What's up, guys? Kevin Cage here with another crypto update. I hope you're doing well, and this is going to be our monthly iTrust Capital video. We have a bunch to go over today. So be sure to stick around because we have some really big news related to crypto assets and 401ks in the United States. With the United States Department of Labor rescinding their 2022 guidance on cryptocurrencies and 401k plans. And we also got news that iTrustCapital is allowing crypto deposits directly into these premium custody accounts. So we have Bitcoin, XRP, Solana, ETH, XLM, ADA, HBAR, SWI, and Chainlink. Alright, so let's dive in and talk some numbers. So in the beginning of this video, I played a clip of Kevin Maloney, the CEO of iTrust Capital. This is over at the FinTech Meetup, and this was uploaded just a month ago. And obviously a month ago, Bitcoin wasn't over 100k. It was really kind of playing between the 80s and the 90ks. But he said something really interesting related to the $13 trillion in IRA assets out there today for individual retirement accounts. Basically saying, if even just 5% of that $13 trillion flows into crypto, or even just Bitcoin specifically, over the next 5 to 10 years, we're talking $600 to $700 billion. And he's referring to inflow of that hundreds of billions of dollars flowing in. And if you guys remember this study from a long time ago, there's a multiplier effect of the inflow. For every $1 billion invested into crypto, the market cap rose by $50 billion. So that is a 50x, or a factor of 50, and this was years ago. Point being is, even if it's only a factor of 5, 10, 20, that's absolutely massive. So you don't need as much money to actually flow into the crypto asset class like we think. Now, we don't know the actual multiplier effect today because this report was like 7 to 8 years ago, and considering today's ecosystem with liquidity, order book depth, etc., it could be different. The point being is there's always some level of multiplier effect. Because market cap is absolutely nothing, that doesn't mean there's that amount of money liquid in that asset, whatever its market cap is. It's just last traded price multiplied by the circulating supply. So just like the market cap of the S&P 500, say it's $49 trillion, there is nowhere near $49 trillion actually liquid in that index. It's far less. And if you guys remember, over the past year or two, iTrust Capital had approximately $3 billion in AUM, or assets under management. And if you watch this full interview, they're projecting around 12 to 15 billion, which is huge. I've had my Roth IRA with them since January of 2020, maybe like a year or two after they were founded, and just to watch them go from zero to over a $1 billion company is crazy. And what would be even crazier is if we continue to see bigger inflows over the next 5 to 10 years, and knowing that iTrust Capital has $15 billion in AUM, and we do see hundreds of billions of dollars, which would still equate to just 5% of the $13 trillion in IRAs today. That's crazy. And I have iTrust Capital linked right in the top of the YouTube video description. Now let's get back to these clips because there's really good info.
iTrust Capital, founded in 2018. We've got 100 people in Southern California. We are a fintech software platform that serves working professionals across America, allows them to invest into digital assets, cryptocurrency, through their IRA, their individual retirement account. So it's a tax advantage account on our platform that lets you buy and sell digital assets.
You guys tripled last year, you'll double this year, 100 million plus revenue this year, billion plus valuation. How did you do this somewhat undetected? And how have you broken out as a leader in the space? What did you do differently?
Yeah, the diamond in the rough, the DIR. We kept our head down. We focused on a niche category that I would say wasn't super sexy in the crypto space. I mean, my job is to keep us out of news for negative stuff and create shareholder value, right? So that's all I have to do. Stay out of the news for negative stuff and try to deliver shareholder value, aside from recognizing and sustaining and rewarding some really talented people around us. But we focused on a niche category that no one was really paying attention to, and we kind of stayed down the middle of the fairway. We were probably the most boring least sexy company in the crypto arena. And I like it that way. My background, I came from a large investment firm, Pacific Investment Management Company, PIMCO, and I was a compliance officer there. And so I dealt with all the rules and regulations. And so innately, since inception in our DNA was just follow the rules and regs, do everything by the book, and do the right thing for the clients. And we focused on this category, and we said, look, we got in, we launched the platform in 19 after a year of development. And I think we did, tens of thousands in revenue that year. And the next year went to 3 million, the next year went to 50 million, and it went on from there. And, but I think the differentiating effect was the fact that we were able to not overcharge, give excellent service, and give people really access to things they wanted. I mean, there's tens of thousands of digital assets out there. We offer 75.
Do you think that there's been such a, I think, disappointment in the crypto community that somehow after these statements, after the crypto president, Bitcoin's not at 150 or 200,000? Why do you think it's pulled off the way it has?
Yeah, so not a recommendation to buy or sell anything. That's my disclosure. But I think with the election, there was such a euphoric rise of, oh my gosh, it's going to go to the moon, digital assets in general, and specifically Bitcoin. And I think we saw that early run up right after the election, that week, that month following. And when they came out with a little bit more clarity last week about the crypto reserve and this crypto stockpile, and I can explain the difference there, I think people expected more, to start buying $1 to $5 million a day or a week of digital assets, which people had pitched the president on. What really happened was we got a little bit of clarity around Bitcoin, the asset, and the fact that it had been seized through forfeiture and bad actors. So we hold a lot of Bitcoin. That's going to be stored in what they call a Bitcoin reserve, so that you can never sell it, and it'll just sit there and will increase in value, kind of like a hedge, maybe a digital hedge, like gold, digital gold. There's the stockpile of crypto assets also. The government has, through various means and resources, obtained other digital currencies, for example, Ethereum, that they have in a stockpile. And the executive order for the Bitcoin reserve is hold it, just hold it. And you can, in fact, acquire it. We can acquire Bitcoin down the road if we have a budget-neutral approach to getting it, and it doesn't cost taxpayers any money. So there are some approaches that might generate, acquisitions of more Bitcoin. The executive order for the crypto stockpile, for example, Ethereum, the Treasury Secretary and the Treasury of Commerce actually can manage actively that stockpile, that portfolio, buy it, sell it, whatever they want to do. They can actively manage that portfolio like a hedge fund's managing a fund, and they can even sell it and buy more Bitcoin. So that's really interesting. What's coming next is also interesting, is that we're going to get more clarity on stable coins, for example, USDC, US dollar crypto, or USDT, US dollar tether. So we're going to get a little bit more clarity on those so that we have a safe vehicle that is truly stable, pegged to the dollar, that we can use as a vehicle to get in and out of digital assets. That's going to happen. There's a bill being written right now that's going to talk about a myriad of things, but possibly some tax advantage for certain crypto, things like that. There's going to be some regulatory clarity coming out from the SEC. In fact, there's a meeting later in DC this month with the SEC Commissioner Hester Peirce is hosting that. So we're going to get a little bit more clarity around that. So this framework of buy it, it's going to go to the moon, it's not happening right now like the masses had hoped and had bet against early on. But I think we're seeing the pullback because that's it. We're going to get some more clarity. We're going to understand that these things aren't going to go away. The government's not going to shut down banks. We're going to get some regulatory clarity from the SEC. And we have a responsible approach to understanding and managing a reserve and a stockpile. I mean, that's a good start, right? It's step 1 and 2. But there's more to come. I think there'll be some bigger things happening the second half of this year that I think will really benefit the community from a more exciting approach. We're the biggest. We're the largest crypto IRA platform in the country. We don't compete with Kraken, Binance, Crypto.com, Coinbase. In fact, we work with most of those from a liquidity and or safe storage perspective. We don't touch the client cash. We don't touch the client crypto. It's cash with Wells Fargo, for example. We have qualified custodians that are regulated, and there's very safe, secure storage with Coinbase, for example. We spent 2 hours with them this morning, big partner of ours, and they take security very seriously. We're the biggest, and we'll have, 12, 15 billion on our platform end of this year. There's 13 trillion in IRAs alone, 13 trillion in investable assets, and we're the biggest, and we have, a fraction of that. And there's a lot of discussion out there. Even today, Senator Loomis mentioned every American should buy Bitcoin, I'm summarizing, for their retirement and hold it. It's not my recommendation, obviously, but Senator...
The U.S. government, it's got to be.
U.S. government, right? Can't go wrong. So there are people feeling a lot more comfortable with this new framework that was discussed in a public forum at the White House. And now people feel comfortable. You're going to see large institutions saying, yes, Mr. or Mrs. Jones, I could see us being comfortable with 1, 3, 5, or 7% allocation. Our clients, just anecdotally speaking, I think they have about 10 to 15% of their portfolio exposed to digital assets. Again, that's all self-directed on them. They decide. And we figured out how to be really good at excellent service for the demographic, which is the 40 to 60-year-olds. The crypto moms and dads that are, watching their portfolio and coaching soccer or baseball on the weekends, guys like me. They're not betting the farm. They are very curious in participating. They're allocating 5 to 15% of their portfolio, and they don't want to get hacked. They don't want to look dumb, vulnerable, or weak, and they don't have enough to retire on. So why not participate in this area? What if Elon Musk tweets about my favorite coin? Maybe I'll get a little bump. But that's the group of people we service, working professionals across America. And because they're not the early fanatical adopters, maxing out $3,000 on their parents' credit card, buying some curious meme coins, they are mature investors that have seen multiple cycles. They're not betting the farm, but they're invested, and they're serious about it. They want to speak to someone in the U.S. that is going to walk them through the process, and that's what we do. We have an excellent rating on our service, and that's hard to do at scale.
So I thought that was very interesting. I decided to play all those clips together instead of me interrupting every 2 to 3 minutes just to highlight iTrustCapital's momentum and what's in store for the crypto asset class. Next up, so we did cover the premium custody accounts. You guys can check out the playlist on my YouTube channel for iTrustCapital, but really cool to see that they're allowing crypto deposits. And friendly reminder that this feature is only available for premium custody accounts, which is a non-IRA taxable account. For a Roth IRA, for example, those still have to be funded via US dollar contributions or in-kind transfers from another crypto IRA provider. And with that being said, this PCA feature is still a game changer for long-term taxable holdings. And also link this right in the top of the YouTube video description. We can see that the minimum deposit amount is $5,000, but you do have a nice selection of assets. Now I also have to go over this because this just happened a few days ago, and this is very relevant for the crypto asset class. So we had just a few days ago, the Department of Labor basically reversed their anti-crypto stance on 401ks. What does this mean? Well, we have a pro-crypto administration, and the Department of Labor kind of pulled back, and they're going back to being neutral instead of too much overreach. So this is a really positive development because this is allowing fiduciaries to decide whether to include crypto assets in retirement plans. So we're seeing this policy align with pro-crypto initiatives, not just on a federal level, but even the Bitcoin reserves in several states. It's a very big deal, and we're continuing to see increased institutional acceptance of digital assets. And without a single doubt, we are going to continue to see more fiduciaries, more institutions roll in and begin offering crypto assets. We already have Fidelity and a bunch of the big ones, but this also makes me think of iTrust Capital's recent announcement with third-party administrator accounts, designed for TPAs, IRA providers, trust companies, and any financial institutions looking to add digital assets to their offerings. And nothing against Fidelity, we know that they're one of the largest institutional providers alongside Coinbase Prime for iTrust Capital, but their Roth IRAs, their options are so limited. Having a crypto Roth IRA with iTrust Capital, I have a mobile app, I have 75 different assets to choose from. With Fidelity, it's the same fees, it's free and just a 1% transaction fee if you trade, but I don't want to choose between just Bitcoin, Ethereum, and Litecoin. So there's a reason that iTrust Capital is one of the biggest today. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.